In the 11th problem, so 11th problem, following the balance sheet 1st April 2019 and receipts and payment account of Dayanand Library, you are required to prepare income and expenditure account for the year ended 31st March 2020. So for this, they have given a liabilities and assets and receipts and payment account of receipts and payment. They given receipts and payment. They have given assets and liabilities also, and the adjustments are depreciation on books at 10%. We calculated in a 10th problem, and depreciation on furniture, that also we calculated in 10th problem, and 50% entrance fees and whole amount of life membership fees should be capitalized. This is the new entry for this 11th problem. And library had a 2000 members paying subscription rupees 100 each. This is the one new adjustment for the in this problem, 11 problem. The value of unused postage stamp was rupees 200 rupees. These three are the new entries, new adjustments in the problem, in the 11th problem. So other entries we have calculated in the ninth and 10th problem. In the 11th problem, there are three entries are there. So that is a 50% of entries with life membership fees, and library 2000 rupees, subscription is 100 rupees, and value of unused postage or stamp rupees 200 rupees. Using these adjustments and balance sheet and receipts payment account, we need to calculate expenditure, income and expenditure account and balance sheet. So in income and expenditure account, assets, all the payments accounts will come in, all the payments entries will come in income expenditure side. So to salaries amount is 24,000 rupees, and to postage, purchase of postage is 1,500 rupees, and we have adjustment for the postage stamp, that is a postage stamp. It is how much? It is 200 rupees. The value of unused postage stamp is 200 rupees. So this is a postage stamp, opening stock is 500 rupees, and add purchases. So this is 500 rupees is a stock of opening stock of a postage 500 rupees, and add purchases. So purchases is how much for the postages? It is 1500 rupees. 1500 rupees plus 1500 rupees plus 500 rupees. This is, and we need to add these both amount 500. This amount we are taking 31st March 2019, it is a opening stock, and 31st March 2020 it is a closing stock amount. So that is 2000 purchased on 110 2019. So uh, that is purchased on 31st March 2020, that is 1500 rupees. So that is 1500 rupees plus 500 rupees is a opening stock, and for the closing stock of postage stamp it is 200 rupees. Valued unused postage stamp is rupees 200 rupees. This in a adjustment if it is given in, that will take as a closing stock. In a ninth problem we solve the same adjustment. So for the different item, but here it is a postage, that is 1500 plus 500 is 2000 rupees, and closing stock of 200 rupees of unused postage stamp, that is 200, and its total amount is 1800 rupees. And next it is printing and stationery. Printing and stationery amount is 6000 rupees, and rent amount is 18,000 rupees, and to depreciation on books. Depreciation on books amount is books purchased. So we have books, that is 6 lakhs 50,000 500 50,000 rupees, 50,500 rupees, and again books purchased in 2000 March 2020, that is books purchased in, that is on first October 2019, that is 1 lakh rupees. And for the depreciation books at 10%, 10% we need to calculate. So this adjustment we have calculated in a 10 sum. So same method we have to follow that. like a calculation of depreciation on books, that is 10% depreciation on 6 lakhs 50,500 rupees. This is a opening stock. This is asset side given, it is 6 lakhs 50,500 rupees, 10% depreciation on that, so it is a 65,550 rupees. So that is a depreciation amount. And depreciation on 1 lakh for 6 months when it is purchased books on 10th it has purchased. So we need to consider for 6 months. Means when they are purchased in a month of October, so October, November, December and Jan, Feb, March. So it's a 6 months, 6 months amount we need to take. 6 months need to take a timing period duration. So it is 10%, 6 months, 1 lakh divided by 1 lakh into 10 divided by 100 into 6 divided by 12. So it is amount is 5,000 rupees. 65,000 plus 5,000 is 70,050 rupees as a amount, as a depreciation amount. So this depreciation amount will, so depreciation on furniture amount books is 70,050 rupees. So depreciation on books it is 70,550 rupees. And furniture we have in the asset side, that is 50,000 rupees for a furniture, and in the income and receipts payment account, that is furniture amount is 30,000 purchased on 1st July 2019. So for the furniture we have a depreciation 8.5% per annum. So we have adjustment for the furniture. First, what should we do? First, in the asset side we need to take asset side of the furniture amount is, yeah, 50,000. 50,000 we need to calculate in 8.5%, that is a 4,250 rupees we'll get it. And for the in a payment side also, furniture it is a 30,000 rupees for when they are purchased in the month of 7 July. So July to July we need to calculate. So in the month of books purchase, sorry, furniture purchased in the month of July to March, there is a 9 months gap. So 9 months we need to consider, but here I mentioned it is 6 months, but we need to take 9 months. So from July to March, 9 months. So 8.5 divided by 100 into 9 divided by 12, the amount is 1,912 rupees. So total amount is depreciation on furniture amount is 6,162 rupees. That depreciation amount I'll take in here, that is 6,162, and depreciation total amount is 76,201 212 rupees. And next, by member subscription. So that is by member subscription amount is 1,80,000 rupees. Yet subscription received in advance. So we'll see if there is, okay. Library had members paying subscription rupees 100 each. So, okay, this is the one amount in advance. So subscription received in advance, that is 3,000 rupees. So that we need to add with the subscription amount, member subscription, that is 3,000 rupees. Add outstanding subscription. Add outstanding subscription, it is 7,000 rupees. So outstanding subscription is 70,000, 17,000. So total amount is 2,000 rupees. By entrance fees. Entrance fees is amount is 30,000 rupees. And less capitalized of there is for the entrance fees we have a adjustment, that is 50% capitalized amount. Where it is? So 50%. So 50% capitalized amount is 15,000 here. So total amount is 15,000 by sale of old. So next is in asset side we'll calculate cash in hand. Cash in hand, that is 9,500 rupees, and cash at bank it is 43,000 rupees, and furniture amount is 50,000 rupees. Furniture amount is 50,000 rupees, and add purchases is 30,000 rupees, and its total amount is 80,000 rupees. 80,000 rupees on less 8.5 depreciation. rupees 6.16, so it is a 73,838 rupees. And books also it is the same. So books it is a 1 lakh plus 1 lakh plus 6 lakhs 500 to 50,500. So depreciation amount is 70,050, so total amount is 6,850 rupees. Stock of postage stamps, stock of postage stamp, that is 200 rupees. And investment in securities it is, where it is, investment in securities 7,000 rupees, so 7,000 rupees. And investment in fixed deposit, second is 50, that is 50,000 rupees. And next is outstanding subscription, it is 17,000 rupees. So next amount is postage stamp is 200 rupees. And investment in securities amount is 7,000 rupees. So taken here 7,000 rupees. Investment in fixed deposit amount is investment in fixed deposit. So investment in fixed deposit amount is 50,000 rupees. So 50,000 rupees here. And capital fund is, then here this we are completed with the asset side entries. Then outstanding subscription 17,000 rupees, that is coming here. So outstanding subscription amount is 17,000, we are taking it here, outstanding subscription. Next is by entrance fees 30,000 rupees, by entrance fees is 30,000 rupees. Yeah. Next, less 50% capitalized, less we have adjustment 50% capitalized we need to make on the entrance fees, that is 15,000 rupees. By sale of old newspaper, by sale of old newspaper is 2,000 rupees. And by hire of lecture hall it is 10,000 it is 10,000 rupees. And again by interest on securities it is 10,000 rupees. Interest on securities it is 7,000 plus